So I want to debunk a little credit card plus offset. This is often talked of as this brilliant scheme which saves you heaps of money, and I want to explain exactly how you work out what the savings is and exactly what the savings would be for an example. So basically what it is, if you don't know what it is, it's having a credit card and doing your monthly spending on your credit card. So your credit card bill goes up during the month. Any extra income that comes in goes into your offset account, which also builds during the month. So that offset account is saving you money throughout the month. Your credit card bill going up during the month isn't accruing interest until the end of the month. And so you pay it off at the end of the month. And so I guess the net result is you have more in your offset during the month because you're not actually spending that money. You're spending the money that's on credit. And at the end of the month, you're paying that card off in full. And so not actually paying any interest on that. So what's the net effect of this? So to work out the net effect of this, we need to work out how much is in the offset account on average for a month. And so that depends how much you spend. So I'm going to use very, very basic numbers. Let's say you spend $5,000 over the course of the month on your credit card. So not all things can go on the credit card, but let's say you can spend $5,000 through the credit card on daily things and that sort of thing. Now, what this means is that during the course of the month, let's say it's a 30-day month. Let's pretend all months are about 30 days, and your spending is completely even across the month. So if you're spending $5,000 for the month, you're spending a 30th of $5,000 each day. On average, it might be something similar to that. Maybe all your expenses come at the end of the month. Maybe most of them come at the start of the month. But for ease of working out, because this is only really an estimate of savings, we'll assume that spending's even. So what you can then do is go, okay, well, what's the midpoint of the month? This is actually going to be the average level. Later in the month, it's going to be higher. Earlier in the month, it's going to be lower. But this gives us the average, which will be exactly half of the total if this is a perfect line upwards. And so $2,500. So the net effect of this spending on the credit card during the month is that you'll have on average $2,500 extra in the offset account that you wouldn't have otherwise had. Now, if that's the average for the month and your spending month on month is the same, then the next month that's going to be the same average, and so on and so on. And so you can assume for the year, and let's work on it on a yearly basis, that your average extra in the offset account by using this scheme or whatever you want to call it is $2,500 extra in the offset account. So, which is good. I mean, I'm not saying this is a bad thing. I'm saying that that's obviously good, but I don't think many people understand exactly how much their saving is. Okay, so let's take a loan of 4%. So you're offsetting your loan by $2,500 extra, assuming your loan's 4%. What's the net result of that? I'm working this out on the fly, so just give me a couple of seconds. It would be $100. So the net effect of spending on your credit card, paying it off at the end of the month, not having any credit card fees and spending $5,000 a month, and so boosting your offset account by about $2,500 on average throughout the year, your net saving is $100 for the year. Now, that's all well and good, but most people assume that they're saving a lot more than $100 for the year on this scheme. Now, the issue comes when you're spending to the end of the month and it accidentally clicks over to the next month. And so your interest rate for that amount goes to, I don't know, somewhere maybe 20% or something like that. And so then the net benefit of this obviously decreases massively. And so on and so forth. Probably the biggest issue with this is if you're spending on credit card, instead of spending cash or debit, you're more likely to overspend. Now, I don't know exactly what the stats are, but I do know that you are more likely to spend more money if you've got a credit card than not. Let's say over the course of the year, say your spending's $5,000. So what's that, 60,000 for the year, 60K, you only need to overspend by using your credit card by an extra $100, which is whatever that is, 0.05-ish, 0.5-ish of a percent, I guess. 0.5-ish of a percent. I don't know, sorry, about 0.2%, maybe a little bit under. Anyway, either whatever it is, a tiny amount. So if you spend, because you've got a credit card, 60,100 instead of 60,000, then this is null and void. And basically the whole, I don't know, preposition comes undone. So this is, to me, this is one of those big kind of crocs that, I don't know, you meet someone and they basically just want to come across as if they've found these magical bullets for you, and you think, wow, this person's brilliant. To be honest, they probably don't understand the savings. If they're telling you about how good it is, they probably don't understand the savings, haven't actually worked it out for themselves. If you're spending $20,000, $30,000 on credit card a month, potentially there could be savings. That being said, it's still all relative. If you're spending that much, if you've got that much money that you're able to spend $20,000, $30,000 a month on credit cards, then is that saving like over here, which would be, let's say someone's spending $30,000 a month, that's going to be 6 times this, that's going to be $600 for the year that they're going to be saving. Spending $30,000 a month on credit cards that they would have otherwise spent of their cash. So it's, as you can see, not necessarily the be all and end all. Anyway, that's my quick little explainer on that.